straight so it doesn't fall down. Hope everybody's having a great afternoon after the Easter weekend. In this video, we are going to be talking about how Powell is screwing everything up for Trump, and that Trump is still yet demanding that the Federal Reserve lower interest rates immediately and wanting to fire Jerome Powell because he will not lower interest rates immediately. And now I think about this, when it comes to the Federal Reserve and the adjustment of interest rates, it comes down to the Federal Open Market Committee. It doesn't have anything to do with Powell except for being the spokesperson and having. There is nothing that's going to change about the way that the FOMC is conducting monetary policy by replacing Jerome Powell. This is probably one of the biggest, I don't know how else to describe it other than a handshake gut punch. Hey, look over here, wave over in this area, look at this, and then punch you right in the gut. Because this is ultimately what the administration is doing to the people out there when Donald Trump is coming out and blaming Jerome Powell, saying that if we could replace him, we need to, have this person replaced because we need to lower interest rates. And if he would listen to me, he would lower interest rates immediately. And I'm thinking to myself, even if Jerome Powell wanted to lower interest rates, even if he agreed with 100% of what Donald Trump was saying, even if he was like, yes, dude, let's do this together, let's make it happen, and he stepped up to go and vote on his idea on where monetary policy would go, it would be one of 11 other votes. Or 12, 11, there's 12 voting members on the FOMC, 5 alternates, and 2 advisors. Nothing would change. Literally nothing would change when you change Jerome Powell, replace him with somebody else. The whole idea that is being pushed out there, and you think about it, like the whole idea that Donald Trump is pissed at Jerome Powell, and because of this, it has caused the stock market to drop 1,000 points on the Dow. Like, really? Is there that little understanding of how monetary policy actually works that people would believe this? Absolutely. I could not find a single person out there who knew what the FOMC is. I asked a bunch of people. It's just like, have you ever heard of the FOMC? And just random people, just asked them. It's just like, hey, I'm just curious. In all your, travels and everything else, have you ever heard of the FOMC? And literally nobody can tell me what it meant. Not a single person. Has no clue of what they do. Has no understanding of what it is that monetary policy and the voting on monetary policy and the process in which that happens, and literally nobody had any idea of it whatsoever. But then I asked them about tariffs, and they could just babble on all day long about it. They knew all kinds of information about tariffs. They could talk all day about it, but couldn't tell me one single thing about the FOMC. And I'm like looking out here at the mainstream media, watching people do their investments, watch them do their strategies, watch them understand where it is that their retirement funds are either going or not going, or whatever it is that's happening out there. But yet most people couldn't understand or describe what it is that the FOMC does. Right? No, that's what blows me away. It's like, Trump says Powell should do it now. And I'm thinking, do what? Vote on monetary policy? That's the only thing he has. I mean, he's the spokesperson for the FOMC. So when, the FOMC makes a decision and he has to get out there in front of the mainstream media and do a press conference and talk about what it is that's going on with monetary policy, he is speaking on behalf of the entire FOMC. Replacing Jerome Powell does nothing to the monetary policy except for change the spokesperson. That's it. You want to shoot the messenger? Fine. Trump wants to blame the messenger. You know why? It's because he doesn't have anybody else to blame but himself, and he doesn't want to blame himself. So instead, he turns to Jerome Powell and say, that's the dude who's the problem. And you replace Jerome Powell and nothing changes. Like, even if you wanted to change monetary policy right now, if you were to make a voting change to monetary policy and you adjust interest rates, it'll take 6 months to a year before that really starts to impact the economy. By the time that Jerome Powell makes a decision right now, he will have already finished his term. and he will be out. Like literally anything that happens right now with the FOMC, by the time it actually starts to take any kind of effect into the economy, the person who made that decision, as far as chairman goes, on his vote at the time, will no longer be in that position, and will not be dealing with the monetary policy at that point. He will be gone. Yeah. This is what I find humorous about this whole thing, is that most people look at this saying, oh man, he's trying to act politically, he's acting in, trying to destroy Trump or something of this nature. And I'm thinking, no, this is completely delusional thought. What's going on right now is a long carried out strategic plan to deal with the fact that the monetary policy had a low neutral interest rate environment. And I've said this millions of times. Now, I could talk about it all day long and really describe it in detail, but since most people don't even understand what the FOMC is, I think we'd probably start there. And to know that changing the spokesperson, the chairman of the FOMC, literally does nothing for monetary policy except for the person who is delivering the message. Now, when we understand that the Federal Reserve was in desperate need for elevated inflation expectation in order to raise the neutral interest rate, and how during COVID, right, that the Federal Reserve prior to the inflation that we had experienced was saying, we know it's going to be painful for the low income households, especially those with cut wages and lost jobs, and that the cost of energy and food is going to be very painful experience for them. However, monetary policy at the lower bound of zero is much more of a problem for the Federal Reserve and the broader economy than a handful of people who are going to be suffering in pain and misery at the lower income scale. This is what the Federal Reserve said. You are going to be facing pain and misery. And now here the pain and misery starts to come, and it's not like, it's the economic environment is being helped right now as far as easing the pain and the burden and the suffering and the uncertainties that are coming. It's only getting more elevated as time goes on. And every single time you find that there is inflationary expectations that are being pushed into the future, that is a total benefit to the Federal Reserve. Most people look at it and say, no, this is a painful experience. It's going to slow the economy down. This is a bad thing. But for the Federal Reserve, it's a good thing. It's because they're regaining their monetary policy. Understanding that the Fed funds rate operating at the lower bound of zero with a low neutral interest rate was essentially a broken central banking system. It wasn't going to work any longer. And that elevated inflation expectation was absolutely the most critical part of saving their system. And it worked. COVID totally saved the day. And I did a video, I'll see if I can find the link for it. I'll leave it down in the description for you guys, talking about how, not knowing exactly how they were going to do it, but knowing that they were going to, talking about the Federal Reserve, they, right? People say, who is they? They is the Federal Open Market Committee, right? How they were going to be looking for elevated inflation expectation continuously into the future. Never have a moment in which that the inflation would actually come down. For most people to try and understand that, it would blow their mind. They would be like, no, the Fed doesn't know what they're doing. They're losing control. Inflation is running rampant. And that's exactly what it is that they were hoping that the people would believe. So you have to understand that this neutral interest rate was an incredible burden upon the Federal Reserve and their monetary policy. The neutral interest rate was when the Federal Reserve is neither accommodating nor restricting the economy, and it was very close to zero. The problem being is that if they ran into recessionary pressures, the Fed, would not be able to drop the Fed funds rate far enough below the neutral rate to stimulate the economy, because they hit what they call the effective lower bound. This was the problem. It was a major problem that the Federal Reserve was facing back during the great financial crisis. And they knew it was coming since early 2001, when Ben Bernanke was talking about it in a speech about how deflation and how to prevent it from ever occurring. They knew that they would eventually run into this lower bound of zero with the Fed funds rate being and the neutral interest rate being very close to zero as well. There was no effective stimulus coming from the Federal Reserve's monetary policy. It was not going to work. And they said it. Said, if we are not going to be able to deal with the recession, and that the next recession is going to take an incredible amount of fiscal policy. Oh, geez, wonder about the stimulus checks and all the government spending and all the other stuff that went down during COVID, war-like effort that was happening. This was all in order to save the monetary policy. If that didn't happen, if we did not have the inflationary pressures that had taken place during the COVID era, the COVID years, the Federal Reserve would have been out of the game. They would have been done. It would have been over. However, that elevated inflation expectation and elevated inflation forced the Federal Reserve to raise interest rates. Now they have elevated interest rates, and they are going to keep those elevated interest rates long into the future. Much longer than anybody had ever anticipated. I mean, I said it over and over again, and I don't mean to be bragging saying I told you so or something of that nature, but I said it back then when inflation was taken off that the Federal Reserve was going to keep interest rates extra low, extra long for an extended period of time to make up for the fact that the inflationary scenario failed to achieve the 2% target over the previous 10 years, and that interest rates would then be elevated for an extended period of time with elevated inflation expectations, and how they are able to continue with the elevated inflation expectations is beyond me. I don't know. COVID hit, tariffs hit. I don't know what the next one is going to be, but I'm sure that they're going to keep the elevated inflation expectations persistent, whether it's through an actual war or more trade wars or whatever. Elevated inflation expectation will be the name of the game, and they will create it by having a bunch of uncertainty. So long as people are incredibly uncertain about the future, they will believe that there is going to be problems, and with problems comes inflation. Yeah. They think that there's going to be supply issues, that there's going to be, cost issues coming from tariffs. That's going to cause inflation, regardless of what happens with the money printer. People will behave in a way that creates the scenario. And it's working. Most people look at like Donald Trump blaming Powell as some kind of critical component to his strategy. But I know for a fact that Donald Trump understands how the Federal Reserve's monetary policy works. I mean, if the uneducated economist sitting here in a suburban can understand it, then I'm sure Trump does too. Right? I mean, I'm not so deluded smarter than Donald Trump can be when it comes to monetary policy. However, excuse me, put that little shield up there to protect it. My phone from overheating there. However, also understanding that when you replace Powell, nothing changes about monetary policy. I know Donald Trump knows that, right? I mean, if I know it, the Fed knows it, all the other voting members of the FOMC knows it. If everybody is aware of it, how come it is that Donald Trump keeps saying it over and over and over again? We got to fire Powell. Powell needs to do it now. Powell's the problem. Powell. And I'm thinking, why do you keep blaming this damn messenger for your problems, bro? All right? You replace, Powell's your problem. Powell doesn't do anything to change anything about anything out there except for the person who is delivering the message. That's the only thing that'll change. So the idea that there is this big economic event that can happen by simply replacing Powell is delusional. It's not, it's pure imagination, artistic fantasies. And that's what ends up happening when you have this kind of policy in which that they are guiding the market using their words. And it works. I mean, it's totally working. You can just see it right now. Look at the headlines about how it is that Trump is blaming Powell for all the problems that we are experiencing, and you have the Dow dropping 1,100 points on account of it. And I'm thinking, what would change? What would change? You replace Powell, what are you going to have? Somebody else up there telling the story, but nothing changes about the monetary policy. So again, like I look at what it is that's truly happening out here, it's not a matter of replacing Powell, because even if you did, nothing changes. Absolutely nothing, right? Except for one person's vote. There's 11 other people who are going to vote, right? Plus 5 alternates and two advisors. There's a huge process that takes place within the changing of interest rates when it comes to monetary policy. It's not arbitrarily done by the chairman. And this is what I find very delusional about all the mainstream media articles and discussions and debates about this whole particular topic. It is pointless. It is an absolute worthless discussion to have because it's no possibility of it taking place. You cannot arbitrarily change the interest rates by a chairman's own decision. He can't do that. That's what blows me away about all this stuff. It's like, it's literally it's like pure propaganda information. And Trump is at the helm of this, man. He is leading it. Here, let's talk some more about firing Powell. Why? What difference would it make? Nothing. Nothing changes about this. This is a pointless conversation to have. But yet, you will find that more people are discussing this and being a reason why the economy is in the position it is than you will find just about anywhere else out there. Tell me if they are not telling you to look over here while they punch you right in the gut and give you more inflation. Because that's ultimately what they're looking for. They don't, like all the rest of the stuff, they could care less about. But as long as you have an elevated inflation expectation, they're winning. And it works. You can see it working right now. Alrighty, let's read some of these comments. We're 16 minutes into this. We got 11:20 on the clock. Got a little bit more time to go. What are you saying? Trump is lying? No, what I am saying. Who is this? Conan? What I am saying, right? What I am saying is that these two guys are working together, Trump and Powell, to raise the inflation expectation. Okay, they need to raise the inflation expectation in order to raise the neutral interest rate. The neutral interest rate is the rate that's neither accommodating nor restricting the economy. And right now, the Fed funds rate, this is the interest rate setting policy of the Federal Reserve, is above the neutral interest rate. But so long as you have elevated inflation expectation and give it some time, with the elevated inflation expectation, it'll slowly raise the neutral interest rate, making the neutral interest rate ever closer to the Fed funds rate, which makes the economy less restricted. If you give it even more time and elevated inflation expectation, you may even find the neutral interest rate move above the Fed funds rate, and then the Fed is now in a stimulating position even though they haven't moved. That is what I believe is taking place right now. And every time he comes out with this horse shit kind of information talking about how we need to replace Powell immediately, he needs to lower interest rates right now, even if he wanted to, he couldn't do it. You need to vote on it from the FOMC. They need to accumulatively do it together to say, yes, we need to lower interest rates. Then Jerome Powell will come out and say it. Hey, we, on behalf of the FOMC, have decided to vote and lower interest rates because that's how the process is done. You can't do it any other way. I don't care what he wishes and prays and hopes for. There is nothing else that can be done except for the process in which that it goes down. And replacing Jerome Powell changes nothing about the situation, not a thing, all right? Except for one vote and the person who's delivering the message. The message will still be the same. It's a message being delivered from the FOMC. He's like an actor. He's a paid actor. Trump's not lying. He's trying to raise the neutral interest rate, and it's working by elevating the inflation expectation, by blaming Jerome Powell and saying, there's the problem. There's your problem, guys. It's like literally, it is like gaslighting at its finest. I mean, is it a lie? Sure, right? They're all lying. They're all lying constantly, but what he is attempting to do is raise the neutral interest rate. He may very well want Jerome Powell fired. He very well may want to replace him. He may very well have all these beliefs that he wants him to lower interest rates and all the other stuff. But to truly understand how it is that the Federal Reserve conducts monetary policy, none of that makes sense because it's all pure imagination and artistic fantasies, right? You just make it up. Let's like, how I want Jerome Powell to lower interest rates immediately. How is that done? Well, you got a whole process in which that the FOMC has to vote on it, and that will lower interest rates. All right. What are you going to do about Jerome Powell? Nothing. He's part of the FOMC. He has to vote just like everybody else does. You see what the problem is? Nobody knows this, nobody understands it, and yet here you got the mainstream media pushing this falsified information, not clarifying or describing what it is that it can actually be done out there. Can they legally change the way that the Federal Reserve operates? Absolutely. You can go through a congressional hearings and all the other stuff and the process in which that you are going to change the Federal Reserve's charter. I doubt that's going to take place. But the idea of it, the belief of it, the pushing of that propagandized information will definitely raise the elevated inflation expectation scenario, right? Put the fear and uncertainty into everybody out there, and then the Federal Reserve will be in a position in which that neutral interest rate will move all on its own based on the idea that the elevated inflation expectation is going to be persistent into the future. This is a win. This is a win for the Fed. It's a win for the economy. Think about it. If you can raise that neutral interest rate, the economy becomes less restricted. Again, people look out there and go like, why do we have such a resilient economy? Everybody thought for sure that it was all going to fail and everything was going to come undone and all this other like chaos and uncertainty. But every time you have an elevated inflation expectation that raises the neutral interest rate, the economy becomes less restricted. And then people go like, wow, it's incredibly resilient. I wonder why. And I'm thinking, well, if you watched my videos from 2 years ago describing this and how it was going to happen like this, and I didn't know it was going to come from the fear of tariffs. I didn't know that was going to be what caused it. All I knew is that somehow, some way, that they were going to be pushing elevated inflation expectation because that's what they desperately need. They don't need anything else. They need elevated inflation expectations. In fact, that's what John Williams described as the problem. The problem, like literally, here, let me read it directly from the speech itself, right? Given, what was it? November of 2018. Let me bring it up here. All right. You should go and check these speeches out for yourself. This is all part of the credible threat theory, right? The credible threat theory. Oops, I'm in the wrong spot here. There we go. Monetary policy strategies for a low neutral interest rate world. He says right here, today we face altogether different set of problems stemming from a very low rate, that is the short-term real interest rate that is consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. The problem too low of inflation is that they had the Fed funds rate at the lower bound of zero with a low neutral interest rate. Again, the title of this speech is Monetary Policy Strategies for a Low Neutral Interest Rate World. They were screwed. They didn't know, like they were like, man, if we do not get elevated inflation, we are out of the game. The problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. How do you solve that problem? How do you solve a problem of persistently too low of inflation? Quantitative easing 1, 2, 3, and 4 failed to produce the inflationary scenario that they were looking for, right? I mean, they took a balance sheet of $850 billion to over $4.5 trillion and failed miserably. Nobody really knows it. Like at the time, I was screaming hyperinflation, dumped all my money into silver, thinking that silver was going to go to the moon, right? Believing that there was hyperinflation scenario, only to find out that none of that took place and the inflation scenario was hardly even found. Failed to produce the 2% target. Right? See the problem that they were facing? What does a low neutral rate mean for policy? The low neutral interest rate is a problem for policy here. When a recession hits, central banks may not be able to reduce interest rates well below their neutral to stimulate the economy as warranted because of the effective lower bound, right? They cannot fall far enough below neutral. Again, this isn't me. This is coming directly from the Federal Reserve. This is John Williams, New York Fed president, 2018, like literally saying, guys, we're done. We are screwed here. We have to come up with a strategy to deal with the fact that we are at this lower bound of zero with the low neutral interest rate. The problem we need to solve? The risk of inflation that was persistently too low rather than too high. We need higher inflation expectations. This is John Williams saying this. Right? He goes on to talk about this, right? Talks about how the average inflation falls too low and that people will then have this expectation that you have too low of inflation that doesn't line up with the monetary policy. He says it right here. Say that 80% of the time, the lower bound on interest rates does not constrain monetary policy and the central bank aims for a 2% target inflation rate. During these good times, inflation targeting central bank aims to keep inflation near 2%. But 20% of the time, the economy falls into recession that's so severe enough that the lower bound constrains policy, meaning they hit that lower bound, they cannot stimulate anymore. This is it, guys. This is what they're doing. They're raising the inflation expectation to raise the neutral interest rate. If you can raise the neutral interest rate on an elevated inflation expectation, you will get monetary policy to be less restricted, and then you'll find that the economy happens to be incredibly resilient, and nobody will know why, except for the uneducated economists and the handful of people who are dedicated followers who remember me putting this videos out talking about this exact scenario. I'm still curious on what it is that's actually going to be playing out for tariffs. Every single day I find another article out there talking about how the tariffs are being alleviated. Right? Everybody keeps looking at it. It's just like, nobody knows exactly what it is that's happening out there. But yet, oh, I can't open this one up. Sorry, guys. But every day you find out there that you're finding more and more countries are in negotiations or trying to deal with the idea of alleviating themselves from having these tariffs inflicted upon them, and yet nobody knows exactly what it is at the end of the day, what's going to take place. Right? That fear and uncertainty and doubt is exactly where it is that they get that elevated inflation expectation. It's born inside of that. So long as they can continue to push this, then they can continue to push the anxiety within the people that keeps that elevated inflation, that stress, that uncertainty and fear in order to control you. It's working swimmingly too. I mean, think about it. This whole thing about Powell, like this is the second time I've done a video talking about how even having a discussion about it is pointless, because there is nothing that can be done that can change the way that the Federal Reserve conducts monetary policy, and literally changing Jerome Powell does nothing except for change the spokesperson. That whole thing, right? Every time I find a news article on it that has people's attention and apparently blaming or using that for the reasonings that the Dow has dropped as much as it is, all that is just, it's like delusional thinking. And I'm thinking to myself, man, it works for creating the fear, uncertainty, and doubt. It works for creating inflation expectation. It works for the monetary policy. When you raise that elevated inflation expectation, you raise the neutral interest rate, like it works. Like all the other stuff works. Everything else, talking about tariffs and negotiations and all that, none of that stuff works. None of that works. All these people who were telling me, oh man, tariffs are a really good thing. And I'm thinking, okay, they're a really good thing. But then when they're alleviated and they're no longer in place, are they still a good thing? Right? Like, the whole idea of tariffs ends up being a cost to the consumer at the end of the day. That's really what it ends up being. And now, whether or not you can actually bring manufacturing back to the United States, I have heard effort after effort after effort being thrown at the idea of bringing manufacturing back to the United States. It doesn't work. None of it has. None of it will. Yeah. The best that you could possibly do is to try and prevent any more loss and possibly enhance what is already taking place. But the idea that you're going to have a return of manufacturing or good manufacturing jobs back to the United States is not going to happen. Now, I don't care who you have for president. I don't care what, policies or ideas they throw at it. It's not going to work. And the reason is that the life of the people here in the United States is too luxurious. And as much as people don't want to believe it out of the crappy lives that they may live, we live an incredibly luxurious experience here in the United States, and there's no way that we can compete against people who are out there sleeping on the ground. It's not going to happen. We are a consuming nation. We are a debtor nation. And as much as I would like it to be something that it's not, that's what it is, and that's what I have accepted. Now, me personally, I like the idea of being in possession of gold and silver, especially on days like today where you're seeing gold move up dramatically. But the idea of the United States itself being on a gold standard would absolutely force us into pain and misery almost immediately, as we would import stuff and export all our money and we would fail immediately. There is no returning. There is no fixing it. There is no person out there that you can blame for the problem that we are experiencing, because it took generations of people living in an incredibly elevated standard of living and luxurious life that created this problem. There is no fixing it. It's better to understand the position that we are in so that you can take the best advantage for yourself in what it is that you need to do. But thinking that there is some way that you can fix the problem by replacing Jerome Powell, no, you're not. That's not going to change anything about anything on anything. Like, literally nothing will change because of it. People's belief might. That might change. And then in that sense, it will have a profound impact on the economy. But the results in monetary policy will be essentially the same. There will be no difference. All right, moving on. What time is it? All right, I got a few more minutes here. I started this one pretty quickly. All right, why doesn't anyone seem to understand the U.S. as a nation of consumers? I think people understand it. They just don't. I just don't think that they understand what that really means for a monetary for an economy. Right? Like, we import stuff and then sell it to each other. That's our economy, literally. Okay? A whole other economy could exist where we produce stuff and then sell it out there to the world. That's a different economy. But we're debtor consumers. So the more we consume of the world's production can then buy our debt. This is the unfortunate cycle that we go into, is that it's going to be ever increasing amounts of debt issuance and ever increasing amounts of consumption. The moment that it doesn't happen that way, you start finding deflation and pain and misery and suffering and all the other stuff that nobody wants to experience starts to take place after that. So it's a matter of increasing the consumption or falling into pain and misery. Like, I like the idea of producing stuff and selling it out there to the world. That's a great idea. It's not going to happen. I mean, we do it on some scale, but we're not going to do it to the point that we actually reverse the trade deficit. We are going to import more stuff than we export. That is almost a guarantee, because if it doesn't go that way, we will fall into pain and misery and suffering. And it's sad. I get it, man. I know people think, man, there should be a better way. There should be a hopeful idea that we can go into and work together to try and make like a better way or a better economy or something like that. That's fine. I mean, you can theorize on that all day long. There's probably plenty of people out there who do that, who give all kinds of awesome examples on how this would work, but yet there's no proof in history that it could take place. I mean, nothing that I've ever found. It's cyclical, right? You start off as a poor nation, you become industrious, you work hard, you raise your standard of living, you start importing importing foreign production, you export domestic manufacturers. Eventually, everybody is living in a life with either like pure luxuries or super inequality or super poor, right? The massive inequality takes place, then the new money stops coming in and everybody falls into pain and misery. Like, there's no other way of reversing this. The only way to reverse it is for everybody to cut back on their luxurious experiences, work twice as hard as what they are doing, pay off all the debts, then continue to do that same thing for generations. That's the only way to fix it. Other than that, don't bother fixing it. Don't even try. Just understand that we are going to go into more consuming, right? More debt, more inequality. That's going to be the path that it goes down, because if it's not that path, it's going to be pain and misery for everybody. So, like, if you don't want pain and misery, then you have to understand there's going to be debt issuance, consuming, and inequality. That's it. Those are the only two ways to go. You know? And to believe that there's anything else is, might as well believe that Powell can change the way that the FOMC votes in a single minute and lower interest rates immediately. Like, might as well go ahead and believe that stuff too. Because it ain't, like, it's all illusions. It's not real. All right, moving on. When will times ever be good and affordable? It's like a nightmare. Most people I know struggle to pay bills. Champs, see, that's the problem. I think that's the mindset in which that the people have. Like, literally, it's a scarcity mindset. They put themselves in a position in which that money is very difficult, and then the bills become like so burdensome that they take all the money away. Like, they go to work every single day, they work hard, they put themselves in the flow of money, but they're right in the flow of it. It comes right to them and right back out the other side as they have to pay bills and they got all these expenses, and it's overwhelming to them. Right? And again, this is the mindset. I'm struggling really hard. Why isn't it good? When is it going to become affordable? When is it, right? Not knowing that it's all abundant right here, right now for you. Most people don't see it. They don't understand it. They don't think about it in that fashion. They think, oh no, it's hard. It's scarcity. It's like it's running away. I have to chase it. Instead of just being in the energy of just receiving it. Right? Instead of just being in the moment of understanding that you have to be in the energy of receiving money, because money is little more than just an energy like anything else out there. And I know this is hard for a lot of people to internalize. I had to understand it for myself, because actually I had to reverse engineer. This isn't something that I developed a theory of and then became it. I was it first and then had to understand, why is it that it occurred? Right? Why did it happen to me? See, I wasn't thinking about money when I had the money flowing towards me. When I started this YouTube channel, I had very little of my effort was going to try and make money. Like, I didn't have that in me. That's not what it was. It was about being a YouTuber, making videos that I thought that other people would want to see. That was it. That was the only thing that I wanted to do. And then when I thought about it, it was like, man, I'm just going to make this my personal journal, to make it something that I would record so that other people can say, hey man, I see what your opinions were. I see the links that you put down in there. I'm going to add to your discussion and have a conversation with you. That was the whole point of the entire thing. When it became something that I could monetize, my whole goal was $100, because that's the minimum threshold that you need in order to get paid. You need to earn at least $100. That was my goal, $100. Here it is, thousands and thousands, tens of thousands of dollars later, right? And never once did I ever think, how is it that I'm going to be making the money on there, right? Now, when it came to this last month on YouTube, over the last 3 weeks, going on 3 weeks, I have put very triggering, clickbaiting, fear-mongering titles out there, because I wanted to prove it to myself that headlines get paid. And it's proof of it. My videos got more attention over the last 3 weeks than they have over the last 3-4 months. And now, granted, there's a lot of stuff that's happening within the economy, but literally hitting people with a triggering, clickbaiting title is really all I needed to do in order to ramp up the ad revenue here on my channel. The videos are the same. I conduct myself the same way. There's nothing that changes about the videos that I do in the delivery that I'm doing with them. That's still the same individual belief that I am trying to deliver without outside influences trying to change or influence my opinion. This is me doing my studies, my research, and sharing my thoughts and ideas with you, and nothing about that has changed. All right, moving on. Didn't the hyperinflation fail to happen after the great financial crisis? Yep. Because banks decided to hoard the bailout money due to their fears of another bank failure. Nah, I don't think that was the case. No, I don't think that money was ever really intended to be deployed into the economy. You think about it, the money didn't enter into the economy because it wasn't lent into the economy. Right? Like, some of it was, a good chunk of it was. And you can see where that money actually got lent to, right? It got lent to the real estate market, it got lent into the stock market, it got lent into the bond market, it got lent into all the assets. Asset prices started to move up dramatically because people borrowed money to buy those things. People didn't borrow money to go buy toothpaste. It's like some people probably did, but the majority of the people who were buying toothpaste were doing it on a credit card or something of that nature. Right? So the money wasn't getting borrowed into existence to go and buy all these products out there that people consume every day. It was being borrowed and then going and buying those particular assets, those financial assets, those real estate assets, those, equities, whatever. And that's the reason why you didn't necessarily see the inflationary scenario inside of the consumer price index or something of that nature, because the money wasn't getting borrowed to do that. You see? Like that's the difference. Quantitative easing 1, 2, 3, and 4 filled up the bank's balance sheet, and that's where the money sat. So unless it enters circulation, it doesn't chase goods and services. Now, COVID, whole different scenario, right? All this money was printed and then literally handed out to the people, like, here, go spend this. Yeah. All this money was spent. It was pushed out there into the economy. It wasn't being held by the banks like it was during the great financial crisis and then being lent in. It was like literally just shoved into the people's face. And that's a major difference, along with the severing of the supply chain. That's one of the reasons why we had such major hyperinflation, or had major inflation taking place during COVID and not so much during COVID. Or during COVID and not so much during the great financial crisis. Jesus, I'm losing my ability to speak. But that's really what it came down to, is it sat on the big bank's balance sheets and never really made it into circulation. I get tired of those who have the personality of, oh, that's shiny, I got to have it, that, who wonder why they have problems with raising their families. There's little aspect of delayed gratification. All right. Yeah, YT gets 30% of super chats. Yeah, that's true. They do take a good chunk of the super chats. And I think about it, it's like, that's why I'm really thankful for the people who send me PayPal or Venmo or Cash App or something, because then there's no like, no cut going to YouTube. But YouTube also gives me this platform in order to even have the ability to receive a super chat. So, I mean, it's cool too, right? I thank YouTube for even providing the ability for me to have this platform to do this with. So if they have to take a cut in order for it to happen, I would rather them not do it, but if they're going to provide me with a platform, then, that's what I have to, that's what they get, All right, 1952 was the last major U.S. built liner, 1,000 feet. Military U.S. shipyards have continuously built supercarriers 1,000 plus feet. Dandelion, I'm not sure, but I think right off the top as payments go through their system. I thought it was against terms of service. It makes me not want to send them. Well, geez, Walrus, that kind of sucks for your for the people, your content providers out there who really appreciate the super chats. I understand that you don't want to give anything to YouTube on it, but you should see the amount of ad revenue they keep. You think like, I just get a little tiny piece of the ad revenue. They get the most of it, And it's, again, but it's a platform in which that I'm able to use, and, I get to benefit from it. So it's like, I'd rather have it than not have the platform. Consumers will consume. Yeah, that's right, Wayne. The panda smuggler, no business needs as much as they take. McLovitz. When the public does buy into the idea to expect higher inflation in the future, is the desired effect more spending? No. Okay. I guess ultimately it comes down to the Federal Reserve is trying to do, there's a bunch of things that they're trying to do, but ultimately increase aggregate demand or aggregate spending, right? And now that comes from the consumer. The consumer's spending money. How do you get the consumer to spend money? Well, you could give it short-term stimulus by lowering interest rates. And then people look at those lower interest rates and go, ooh, I'm going to buy a house, a car, or go on vacation because I can afford the payments on this lower interest rate. So that's one way of looking at it, and that's how most people end up looking at it. But really, it goes much deeper than that, because when the Federal Reserve is actually trying to increase aggregate demand or aggregate spending, aggregate consumption, what they are essentially going to do is they're going to lower interest rates. This lowering of interest rates gets businesses to then invest. When they invest, they will buy buildings, equipment, hire people. By hiring people, you get more people working, more people earning money, more people consuming, increased consumption, supply-demand imbalances, and then get the inflation that comes from that. So this is ultimately what the Federal Reserve is attempting to do. Lowering interest rates in order to get more people working, consuming, supply-demand imbalances, inflationary scenario. Quite the opposite on the other fashion. When they restrict the economy, right, less people working, when you get less people working, then you have recessionary pressures start to kick in, and then you'll start finding the deflationary aspects of it, and then lowers the inflation. Now that is the traditional way of understanding how the Federal Reserve operates, and in still a lot of ways that's still true. However, right, because there's big changes to the way that the Fed operates now, is that the Fed realized that with incredibly low unemployment and a lot of people working, it was not creating the inflationary scenario that they were looking for. Since the Obama administration, the end of the Obama administration had historically low unemployments. All throughout the first Trump administration, historically low unemployments. Going into COVID, right, then you found unemployment spike. Up until that moment, no inflationary scenario that had occurred from it. There was an insensitivity to inflation from low unemployment. Now, this is something that the Federal Reserve recognized. It was one of the reasons why they were failing during the great financial crisis, is that they could not find an inflationary scenario. No matter how much they were able to lower the interest rates and lower the unemployment, the inflation was failing. It was not being found. That was their problem, right? So again, like understanding how this is playing out right now, it's important to know that it's a matter of being able to stimulate the economy when recessionary pressures hit. And if you are at zero and the neutral interest rate is close to zero, you're done. You're not going to stimulate the economy. It's going to take all kinds of government effort, stimulus packages, severing of the supply chain. It's going to do all kinds of stuff, because the lowering of interest rates is not going to spark investment demand. It's not going to, lower the unemployment. I mean, it might spark investment demand, it might lower the unemployment, but it's not going to do it in a way that creates the inflation, because they've already experienced how it's not doing it. All right, guys, I got to go. Uneducated Economist, you guys let me know.